In this video, I will show you how I help my clients find winning ideas, generate winning ideas, build a strong portfolio with a good allocation that wins for the long term, that outperforms the major indices in the long term. So yeah, this will be a quick chat, just you and me. Let me have some notes over here so I can write some stuff, and that's it. So with this YouTube channel, I have had a lot of messages, whether on comments or mail on LinkedIn, saying, hey Chris, a lot of people like the video, so thank you for your support. Can you help me with this stock or my portfolio? That's a mess, I don't have a clear framework. Okay, very well. And if we are a good fit together and we can work together, then I can definitely help you. And how can I help you? The first thing we do with our clients to find the investments of their dream, find the portfolio of their dream, is to see what the client is good at. If they have a background in engineering, if they have been playing the golf for 20 years, if they have been a teacher for 20 years, you have different circle of competence. So the key lesson here is to see, okay, if you have been a software guy for 20 years, you know more about the software industry than 99% of people. If you are, I don't know, an engineer, you know more about engineering and, I don't know, bridges, trucks than 99% of people. I've been a gamer for years and years and years. So I know the gaming industry very well, like very, very well. I know if a game is a big hit or not. I know if a game will be successful or not. So I deeply understand the gaming industry. My circle of competence is the gaming industry. So I know if a stock is good or not, or a company is good or not. Now that you have to figure this out very easily. Now that we understand the client, I give them metrics. You have key metrics to understand. So you have metrics like the price to free cash flow. Let me put, that's a big one. Metrics. Let's say MET for metrics. This black is huge. Anyway, key metrics. What are the key metrics to monitor for each industry? Maybe that's revenue growth. Maybe that's big margins. What is a good margin? EBIT margin, net profit margin, gross margin. What is the growth rate for the industry? All the key metrics you need to understand what this business is about and how to find good winning stock ideas. So we talk about free cash flow per share, buybacks. There are some industries that grow a lot. There are some other industries that don't grow at all, but it's all about efficiency. So you want to know the key metrics to understand efficiency, like the return on investment or high margins. But for every industry, that's different. For every industry, you have a different growth rate, different margins, different capital allocation. Some industries, they do a lot of buybacks, or maybe they do a lot of dividends, or they do a lot of M&As. It depends for every industry. So for each client, we see their circle of competence, what they are good at, and we see together the key metrics to look at. And okay, so that was the first part. I have some notes here on my phone. The metrics. And once you understand the metrics and the circle of competence, we do some exercises to find winning ideas. And once we find some ideas, we ask this simple question: is the business simple? That's a very easy question. I agree with you, but this question is very, very important. Is this business simple? Can you pitch it to a 10-year-old child? If you can't pitch the company, if you can't explain what the company is about to a child, it means it's too complex. So actually, I encourage you to do this exercise and ask your cousin of your child, anyone, explain this business model. See if he or she understands what you're talking about. So is this business simple? Let's say simple. Oh, I only have a pad, so that's some excellent writing here. So you have the key metrics. You have the circle of competence. Let me put a circle for circle of competence. And now you ask this question: is this simple? So actually, to be honest, for a lot of companies, we dismiss the investment case. Dismiss. It's a pass. It's a pass. It's a pass. Because the investment is too complex. And that is exactly how you do mistakes. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of this video. How do you avoid the traps? How do you avoid overpaying for your stock? How do you avoid the situation where you buy a stock, you're quite confident, the valuation is not expensive, is decent, and then the stock is cut in half? That happens. And I guarantee that if you don't do things properly, it will continue to happen, because there are certain traps that come always for beginners. And if you don't know what to identify, what are the red flags to identify to see if, okay, this is a value trap, it's quite clear, okay, management don't care about the shareholders, okay, the industry is bad. There are many things to monitor. And so I give them checklists with everything you have to check to understand, okay, you have the key metrics, business simple, red flags, industry, everything. So let me put here, how can I, this is a flag. How can I write a flag? Anyway, you have here a flag. That all the red flags and all the traps, okay? Now, something quite simple, but few people really understand how it works, is valuation. Proper valuation. And I know what you will tell me, Chris, valuation is simple. You just look at the PE ratio, and if it is low, that's good. If it is high, that's expensive. I don't disagree, but I would say that's quite too simple an analysis. For example, if you invest in a software business, in a tech business, you will have a high PE ratio. And the average PE ratio for this industry is maybe 25, maybe 30. So reasonably expensive, let's say it this way. So you compare your PE ratio for your desired stock with this industry. And now you have a car company with a PE ratio of 4. Can you really say that this stock is cheap? Well, you compare it to the industry. The PE ratio for the industry is 5 or 6, or maybe just 5. So maybe it's not excessively cheap. It's just rather cheap compared to the industry. And now you compare this to the growth of the company, and you see that, I'm thinking of Stellantis right now. They have a PE ratio of 3, but they said earnings will be cut in half next year. So actually, you don't buy a PE of 3, you buy a PE of 6. And that makes a difference. Now the company is no longer cheap. So if the growth will decelerate, if earnings will collapse, the stock may look cheap with a PE of 3, 4, but actually that's not cheap at all. And if earnings are again cut in half again in 2 years, you have a PE ratio of 3, 6, or 12 now. So that's a completely different situation. And I would not advise at all to just look at the PE ratio and say, okay, this is lower than 5, this is extremely cheap. Okay, this is higher than 30, this is expensive. You have other things to monitor. There are criteria, there are filters to see, and you have a qualitative aspect of your analysis to see if this is really cheap or really expensive. And you have the reverse situation of having a PE ratio of 35, but the CEO of the company says, we will double earnings next year. So it's not a PE ratio of 35, it's a PE of 17. So it's a totally different situation. So that's it for valuation. Let me put it in black here. That's the Berkshire Hathaway mug from the Omaha meeting, the Warren Buffett meeting of 2024 that I went to. That's great. That's a great reminder. Every year you have a quote here, by the way. And the last point for this video today is the portfolio allocation. The portfolio allocation, the portfolio size. Once you have done the work, once you have found a winning idea, it is simple. You have avoided the red flags. You have figured out the valuation. How much do you buy? Do you buy 1% of your portfolio into this stock, or do you buy 10% or 15% of your portfolio? If you think this is a crazy bet that will outperform everybody, what is the allocation in your portfolio that is good for this stock? And if you put everything in place, that's actually quite simple. You have a quite simple process, a framework to find winning stocks, do the proper work, and build the portfolio of your dream. This is exactly what we do for our clients. If you like this content, I have an investing coaching program to make you a better investor. In this coaching program, you will learn a complete investing process. You will learn how to find stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. So what comes with the coaching program? You will get access to an exclusive community of like-minded investors, and you will get my personal guidance to help you build the portfolio of your dream so that you can have long-term results with your stock portfolio. Click the first link in the description to get more information. You will get a 10-minute video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.